Morning, everyone. Happy Monday. Welcome to another Wealth Coffee Chat. Morning, James. Morning, Jay. Good to see you guys on this morning. Give us a shout out in the chat if you're there. Say a quick hello. Hopefully your weekend was awesome and well. Morning, Luke. How are you, mate? Welcome to another Wealth Coffee Chat, folks. Hey, today we're going to do the final of our 4 pieces of the pie when it comes to the 4 lanes of wealth, the 4 wealth lanes. So stick around, folks. We're going to get into that in a minute. Chinmay, good morning to you. I hope you're well. Quick intros before we get going. Jason Witten's my name. If you don't already know, most of you already do, but if you're new and you're popping by, you run into us, whatever it might be, say hello in the chat. Let us know where you're coming in from, around Australia or wherever you are listening to the morning's podcast / live from. Morning, Nicole. Yeah, and let us know what you're up to. Morning, Trace. Staying warm, I hope. Been property investing over 22 years, actually. For myself, coaching property investors just like maybe you, over 18. Along the way, learnt a few things, and each morning, Monday to Fridays, around about 10 past 8, we get together and have about a bit of a chat, a bit of a wealth coffee chat, actually. Get the day going, try and make sense of all the manicness going on out there in the media. Most people are getting a bit carried away with interest rate dramas, but let's face it, folks, unless you've been living under a rock, a 4 or 5% interest rate is not very expensive, is it? Let's be honest. But that's not what we're here to talk to about today. What I want to talk to today is the final in our 4 pieces of the pie when it comes to our wealth lanes. You guys have been most of you have been hanging around for these ones. The first one, the principal place of residence upgrade strategy. We've talked about that. The second one is your investment property strategy, but aimed around your income. Your income. And this, just to put a little reminder on top of this, folks, this is about the tax efficiency of our world. I'll talk about that in a sec. The third is super, $1.7 million worth of assets you can have in your super tax-free. So, and this is the thing, all right, you can have tax-free there. You can minimize your tax as an income using real estate. Over here, you can have 1.7 million tax-free if you structure it correctly over time. This stuff takes time. You guys know this. And the last but not least, we're going to talk about today is the small biz capital gains tax concession. And you can have $2 million worth of tax-free capital gain at some point in the future, folks, some point in the future. So for some of you guys, this might be, not that interesting because you're not in the business world. But hey, who's to say that you don't start a business or get involved in a business at some point in the future, just so you guys know. You might be interested in thinking about this, might weave it into your plan as you go along. Hey, shout out. Good morning, Sharon. Let's chat today, Sharon. Hope you're well. So those are the 4 lanes of tax efficiency for all of us. 4 times wealth lanes of tax efficiency. You can have tax-free or minimized income or assets into the future. And this is how we as investors must understand the more we get to keep, the better off we are. The more efficient we are, the less effort we have to put in to bring more money in. If you bring in $100 and you get to keep 99 of it, and then someone else brings in $100 and they only get to keep $50 of it, you're better off. You didn't do more work, but you were smarter, you were much better organized and protected. So stick around. We're going to go through that this morning and have a bit of a yarn when it comes to the world of business owners. What is this business owner thing? Well, as business owners, many of us spend many years owning a business. Many of us spend many years owning a business, and we're pretty bad at doing one thing that most people who have a job, it happens automatically. Tell me in the chat right now, and there's probably a few business owners. I can see one or two business owners on here right now. Tell me, business owners, what's the thing that we do poorly for ourselves often when we start our business, but for anyone who's got a job, PAYG career, it happens automatically without question. It's actually illegal not to pay it. Tell me what it is, folks, in the chat. Put that right there in the chat for me right now. What is this thing? Boom, Sharon. Sharon knows it. Well, most business owners, especially small to medium business owners, when they're starting their businesses or getting going, very bad at paying their own super. And unfortunately, some are quite bad paying their own taxes, and they get stuck sometimes. Anyone ever wants to read an awesome book? It's called Profit First. Absolutely awesome book. Absolutely cracking book, folks. Cracking book when it comes to the business world. So grab hold of that one. So superannuation. So many years ago, the world of business owners and government and legislation said, well, we sort of see that business owners, excuse me, we see that business owners are quite, average at putting in super. Most other people in our employment system have the ability to have super put into their superannuation on their employer's behalf. Let's see what we can do. And the government came up with a thing. Now, I don't know the history of this, to be honest, but I'm just telling a story here just to get to a point. Okay? Somebody sat around and said, hey, these business owners aren't very good with their money. Aren't very good at paying their super. How can we help them after 15, 20? Hopefully you're still there. I think I just accidentally pressed a button. Oh, there you are. You disappeared on me. Tell me if you're still okay there, folks. Everyone's still good there? All right. I think what happened is I've done something weird to my... All right. Give me a second, folks. My display has just gone a bit weird. And I have to change something. Hang on. I got a bit excited. There we go. Hopefully this works. Yep, looks like it's working. Crikey. All right. Morning, Alison. Hopefully everything's fine now, folks. I accidentally pressed a button and my screen stopped sharing. Anyway, back to the story. Business owners, not very good at paying themselves super. They have an advantage, which is very similar, of $1.7 million worth of tax-free. We were talking about this a second ago, team. All right, check it out. No matter whether you're in business or not, you can get the PPR upgrade. No matter whether you're a business or not, you got career or business, you can get the investment properties, reduce your personal income tax. No matter whether you're in business or not, you can have access to a $1.7 million tax-free at retirement in the future. However, there's a little opportunity for business owners to take advantage of this one. And you can see this is pretty close, right? As we go along. What does it look like? Let's have a quick look and pull up what the ATO website has to say. All right, the small business capital gains tax concession, folks, allows you to reduce, disregard, or defer some or all of your capital gain. Look at that, all. They don't say zero, do they? Well, it's probably not a good idea to go around saying, you can pay zero tax. It says disregard, defer some or all of the capital gain
from an active asset used in small business. All right. Okay. There's you can go check this out, folks. There's you just go check it out. Small business capital gains tax concession. There's eligibility and 4 bits and pieces, but here's a few of the rules. I'm not going to go through those bits, but there's a few little bits and pieces in here. But here's a few things to keep aware of. The small business retirement exemption. Capital gains tax from a disposal of an active asset are exempt from a CGT up to a lifetime limit of $500,000. If you're under 55, you can roll it over. So here's the drill. And this is not a financial advice. This is just reading straight off the ATO's website, right? If you sold an asset, a business or connected to a business, I've forgot to set this up a little bit, actually. Some of the business owners sitting here right now, tell me in the chat, well, you can say it yes or no, but could you sell your business? Could most small businesses sell their business, their business for $2 million, or up to $2 million? Put that in the chat. What do you think? You reckon the local plumber who's got a couple of vans and a couple of blokes on his payroll, do you reckon he could sell his business for $2 million? Tell me, folks. What do you reckon? Yes or no? And it doesn't have to be your business. If you're business owners in here, obviously, you don't have to share that. But tell me, what do you think? Do you think most business owners in Australia could sell their businesses for $2 million? Whack that in the chat for me. There's probably 1 or 2 business owners here, but I can tell you right now, sitting down with hundreds and hundreds, well, thousands and thousands. You did right, Alison. No, they can't. So there's this thing for business owners sitting there with, like it's this kind of like nirvana, but, most business owners start businesses without the thought of creating or understanding that it's there, available to take advantage of. A couple of things we can do. If you do sell a business and you're under the age of 55, you can roll over some of that into a super fund. So that's an interesting thing, right? So as a business owner, if you qualify with things like, you've got to be in business over 15 years and so on, then there's one way potentially to get some extra cash and capital into your super at some point. Thinking about strategy here, folks. Thinking about strategy. Think about that. All right. If you do sell a business, you can defer a capital gain made from a capital gains tax event as long as you replace that business within 2 years. There's an interesting idea, folks, ladies and gents, business owners. Trading your business, your capital gain, up into another business. There's a thought and an idea. Wow. Okay. And then the last one, you can apply as many of these concessions as you are until the capital gain is reduced to, tell me in the chat, what is it? It's 0. All right. I like that. Anyone like that? I like that. I'm a big fan of that sort of stuff. All right. There we go. So anyway, track that down. I like those things. So as a business owner, if you have a business, let's say, you've got a business here and you can't sell it, it's a no for $2 million, and you work for 20 or 30 years in your business and you can't sell it for $2 million, what could you do? What could you do, folks? Tell me right in the chat right now. What could you do? There's something that you can actually own and operate your business out of that could be worth $2 million at some point in the future. Anyone know what that is? Hopefully this is giving it away. It's probably a terrible drawing, but anyway, there we go. I don't think that's a very good drawing. Anyway, entertaining myself here. Hopefully you guys are learning something. You can own a property. You can own a property And that property can form part of your business asset disposal in the future. And yes, you can own a commercial property. You can own a retail property. You can own an industrial property. Absolutely, Luke, mate. It's a absolute cracking idea, especially if you're going to be in business for 15 years or more, Luke, and a few other things. It's absolutely smart. You can also, folks, now you have to catch up with your accountant and your financial planner on this one. Andy Fenton is an absolute gun on this. So, unfortunately, most accountants don't even know this stuff. And if they do, you have to push them to think about it. And they accidentally try and analyze it for you in reverse rather than in forward. You can actually, folks, in some circle, oh, that's terrible. What is it? Residential. You can actually own a residential property as well. Using the business can use it for sure. Luke, mate, absolutely makes a lot of sense, mate. And there's a few other ways to slice and dice this, folks. So there you go. So let's put this all together. Let's bring this thing to a bit of a culmination here. Principal place of upgrade strategy. What is the limit, folks? Tell me, what's the limit? What's the limit on your principal place of upgrade that you can have? You can sell a property for capital gains tax free. What's the limit? What is the limit on your principal place of residence that you can sell your home for capital gains tax free? What's the limit? Tell me, folks. Put it in the chat. What's the capital gains tax free limit of your PPR upgrade strategy? I want to know this one. No limit. No limit. Don't miss that, folks. There is zero limit. If you owned a home for $100 million and sold it, your principal place residence for $100 million, interesting times. There's no limit. There's no limit to that. All right. What's the super limit? And the let's have a look at this. Small business CGT. So what's the super limit? Tell me, folks. You guys know this. 1.7 mil. Small business, 2 mil. And your investment property portfolio, well, there's a limit to how much you can minimize your taxes, but usually in here, it's usually between 5 and 6 investment properties can get 100K down to, between 2 and 5% tax. So check this out. If you're sitting at home right now and you're going, well, what is Jason on about? What's he rabbiting on about? If you need to have a plan. Do you have a plan for your PPR upgrade? Do you have a plan for your investment property plan? Do you have a plan for the assets there? And do you have a plan for assets here? Those are the questions. And if you don't have a plan, well, you need to get one. All right? Because these are the 4 places that we can create wealth systematically with some high efficiency, which means we get to keep more of our money rather than giving it away to the government or other institutions, okay? State governments, ATO, et cetera, et cetera. So there you go. There you go. Think about that. Ponder that one, folks. Ponder that one. All right. Well, that's it. I'm done and dusted. That is another Wealth Coffee Chat over and out, folks. Join me tomorrow for another one. We've done our 4. Alison doesn't have a PPR plan yet. We'll get one soon, Alison. I know that's been on your radar for a little while as well. So there you go. Wealth Coffee Chat done. Team, you guys be awesome. Be well. Join me tomorrow for another one at some point. Have a great day indeed. Thanks, Trace. Thanks, team. Leave you with some music.
Adios. Have a good day.